to Midday Movers. I am Dion Rabouin.
And I'm Seana Smith. Now to our top story of the day. The Dow is down triple digits here as investors digest a mixed jobs report. The U.S. added just 134,000 jobs last month, coming in well below expectations. But it's not without a silver lining. The unemployment rate fell to 3.7%. That's its lowest level since 1969. Miles Edlin is live in the newsroom with more. And Miles, when we first saw the report come out, we didn't see a huge drop in the futures. But I mean, now are we seeing a bigger reaction here? We don't have Miles yet, so we're going to bring in our panel. We have Andy, and we also are joined by Rebecca. Thank you both for being here today. Andy, I mean, why are we seeing this accelerating drop here in the Dow?
Well, because, it didn't meet expectations. And you know how it always goes with jobs reports. You parse through the numbers. The unemployment rate, of course, is tremendous. And just to give you a little bit of context on that, Sean, I looked this up. So the lowest since 1969, 49 years. But in 1969, we were in the Vietnam War. There were over 500,000 troops in Vietnam. So that makes this rate even more impressive because back then there was a shortage of workers because of the soldiers in Vietnam with a smaller population. So today's rate, I should say, is truly, truly impressive.
3.7%, yeah,
right.
It's down from 3.8%. And sometimes when you get these reports, you see the drop that goes from, you see a drop in the rate, and that signifies there was an increase in labor force participation or people dropping out of the labor force. That's not really the case. I want to go to you, Rebecca. What did you think about the jobs report today?
I think it was a mixed report just because we missed, right? But we also do have a lower actual unemployment rate. And I think that that's actually probably good for investors right now, because if we had such a strong report, you'd see people more concerned about the Fed raising more rates more quickly. And that would also be a concern, especially after what happened yesterday with, the rising the rates that we've already had. So I actually think that this mixed earnings report is actually a blessing.
Rebecca, what are you most worried about in the markets right now? If we move past the recent trade war that we are in, outside of that, is there anything else geopolitically that you are concerned about?
Well, obviously, we're happy with the Canadian and the Mexican deal, obviously, the North American revised NAFTA deal. But China and the talks coming up next month, I think, are going to be really huge, right? And really indicative of what's going to be able to happen for the rest of the year and determinative of what's going to be going forward for the rest of the year. And I think that with yields rising, too, I mean, I think investors for the first time now can see that, I don't have to take all this risk. And I am in a really longest ever bull market here. Do I want to sort of go and hedge my bet and go into the bond side of things? And I think that, people are going to start looking at, do we really have a lot of earnings growth left for the rest of the year?
And we, in our excitement about the market today and all this fear, these red numbers that we're seeing on the screen, we forgot to introduce you all. So we should say Rebecca Walser, president of Walser Wealth Management.
Yes.
And you guys know Andy Serwer. He is the editor-in-chief of Yahoo Finance.
Right,
so wanted to make sure we got that. But, as we step back and look at this jobs report, we also got the revision, and that added 87,000 jobs to the overall number, 190,000 average over the past 3 months. This all sounds good, but again, we see what's going on in the market. Andy, I want to turn to you. What do you think that's all about?
Well, I think that I agree with Rebecca, and it's interesting because I think the black swans are not black. They're white. They're right in front of you. It's not a surprise, and I agree. It's China right there, and then rates are the big one, and then, of course, the midterms. So it's kind of unusual to see things just right in front of you, which to me suggests those aren't going to be the things that's going to bite you. Because when it's so blindingly obvious, except for rates. I mean, rising rates, of course, make stocks less attractive. And, it's going to be very hard to continue this momentum in equities if rates continue on this trajectory. There's no question about that.
Yeah, interesting. Rebecca, talk to me a little bit about the rates. We saw the 10-year rise over 3.2%. I think a lot of people in the bond market were watching 3.1. It just skyrocketed right through that.
I know, highest in 7 years.
Yeah, highest in 7 years. What are your thoughts about that?
I think that the Fed is between a rock and a hard place. They don't have a choice. I mean, here's the problem. You've got you've got the longest bull market in the history of our country now, okay? And they're really out of bullets. That's how I look at them. What are they going to do if something does go wrong? What are they going to do if something that we aren't expecting, aren't looking at, does happen? They're so low still. And so I know that we're so concerned about what corporations are going to have more costs if rates go up and where the profit margin is going to go and all those things. But if we look at the higher level, the macroeconomic level, rates are still so low. And if we do have a massive correction, we're going to look to the Fed to fix it or at least help us. And what could they do? So they have to normalize rates to a certain extent. And I've just accepted that. And I wish everyone would, because it's just where we are.
And you're seeing wage inflation, right, Shauna? I mean, so that's there as well.
But less than inflation.
But you're seeing Amazon
Right, they're raising wages.
Right.
Walmart has done it in the past. And now there's talk that this might actually pressure other companies to do the same, to follow suit. So
It
we'll
all
see if that
screams
happens.
inflation, higher rates. I mean, maybe not screams, but says it pretty loudly.
Yeah.
Right?
All right. Well, Rebecca Walser, thank
Yeah.
you so much
Thank
for
you.
joining us today.
Thank you, guys.